Michael Saylor hasn't made a single Bitcoin purchase since March 19th. You've heard that right. The man who turned a software company into a full-blown Bitcoin vehicle has gone quiet. Radio silence, no buys, no tweets about new stacks, nothing. And why is that? This is the same guy who once said Bitcoin was a once in a lifetime or once in a thousand year asset. The guy who laughed in the face of fiat and said MicroStrategy would hodl until the end of time. Today, he's sitting on just over 528,000 Bitcoin, 10 times more than the next largest public holder, and he is not adding to his position. What's going on? Let's look back to 2020. The world was in lockdown and printers were printing. Saylor called Bitcoin a once in a thousand-year asset, not a trade or hedge. He called it a revolution. Personally, I think it's an evolution, but I digress. But trust me, he wasn't playing small ball. While other execs were stumbling around their Zoom calls, Saylor was stacking Bitcoin like his life depended on it. He bet his entire company, MicroStrategy, a business intelligence firm, and turned it into a leverage machine designed to do one thing: buy more Bitcoin. Back then, he had a big dream and he thought the rest of corporate America would follow him. He thought Apple, Google, Meta, and every Fortune 500 company would be stacking sats and building Bitcoin treasuries. He thought he was lighting the fuse on a corporate gold rush. But here we are in 2025, and the huge stampede he expected never came. Let's look at the numbers here. MicroStrategy holds 528,185 Bitcoin. That's $16 billion worth. Next after MicroStrategy is Mara with 87,600 Bitcoin. Okay, so MicroStrategy, as we said before, owns 10 times as much. So ask yourself, why hasn't anyone followed him? Because while Saylor was out there waving the Bitcoin flag from the top of Mount Leverage, Wall Street was quietly building a smarter, sleeker, and let's be honest, safer version of his entire playbook. I'm talking about ETFs. There is now BlackRock, IBIT, Fidelity's FBTC, Franklin Templeton, ARK, VanEck. The whole TradFi gang showed up. But instead of preaching the Bitcoin gospel like Saylor, they filed the paperwork essentially. They launched the ETF and let the billions roll in. Okay, 12.4 billion in assets under management just months after launch. No dilution, no convertible debt, no crazy CEO promising never to sell. Okay, so let me ask you this. Why would any rational investor buy at MicroStrategy stock with all of its operational baggage when you can simply buy an SEC blessed ETF, or better yet, real on-chain Bitcoin? With these options, you don't get the volatility of a leveraged tech company or the risk of some obscure boardroom debt covenants, and you definitely don't get locked into a company that admits their software business can't even generate positive cash flow. And that brings us to the painful truth. MicroStrategy's entire value proposition is fading in front of our eyes. What used to make it unique, the Bitcoin exposure via equities, is now competing with better, faster, and cheaper ETFs. Now, let's talk about the elephant in the room. $8.2 billion in total debt. In Q1 2025 alone, they raised $7.7 billion. And it's not for R&D or product expansion. No, it's to buy more Bitcoin and to service the monster they've built. Okay, so right now you've got $2 billion in 0% convertibles, $563 million in STRK preferreds at 8%, $711 million in STRF preferreds at 10%, $4.4 billion from dumping shares via ATM equity sales, and those preferreds are just debt in disguise. STRK and STRF forced them to cough up $146 million every single year just in dividends. Now, here's where it gets even worse. The core software business is bleeding cash. It doesn't generate enough to pay the bills. So what is the plan? Issue more debt, sell more stock, or dump Bitcoin? Straight from their 8K, we may be forced to sell Bitcoin at a loss to satisfy our obligations, okay? I know this is just boilerplate legal talk, but keep in mind that this isn't just a leverage bet on Bitcoin, it's a liquidity trap. And don't forget the dilution dangers. Those convertibles could unleash 26.4 million new shares. If the stock goes up, holders convert. You get diluted. If the stock goes down, the company can't raise equity. Lose, lose. Now, this is the part that nobody wants to talk about. If Bitcoin drops below $68,000, we're already in dangerous territory. Why is that? Because suddenly those juicy unrealized gains are gone. MicroStrategy starts racking up unrealized losses on a multi-billion-dollar Bitcoin stash. And when equity investors see that kind of hit, the stock tanks, guys. What if Bitcoin slips under $45,000? That's when the real pain starts. At that level, MicroStrategy cannot cover its obligations, plain and simple. We're talking $55 million a year just in preferred dividends. Add in hundreds of millions in convertible note interest and a sprinkle in some operational overhead, and you've got a massive cash shortfall. They've been patching the hole with equity sales and Bitcoin strength, but if Bitcoin stumbles, they're forced to sell, and you know what happens when they start dumping Bitcoin? The price drops even further. Lower price means more forced selling with a full-blown liquidation spiral. And before you call this FUD, this is straight from their own April 2025 8K. If the leverage price of Bitcoin during any quarterly period is below the estimated average purchase price of Bitcoin sold during such period, we may need to be required to sell a larger number of Bitcoin at a loss to satisfy our obligations. If Bitcoin price dips into the $40,000 range, we're about to find out how strong strategy really is. That actually might be kind of fun to watch. If you like this, please like and subscribe. All right, let's peel back one more layer. You think that buying MicroStrategy stocks means that you're indirectly owning Bitcoin, right? I mean, that's a whole pitch. That's what Saylor's been selling since 2020, but here's the fine print, literally. Ownership of common stock does not represent ownership of Bitcoin. That's from MicroStrategy's own investor disclaimer. So what are you actually buying? Not Bitcoin, not access to Bitcoin, not even a claim on Bitcoin. You're buying Saylor's financial engineering experiment. You're buying his leveraged, tax-laden, dilution-happy machine that just happens to be hoarding a pile of Bitcoin. Now let that sink in. You're not getting Bitcoin. You're getting the idea of Bitcoin wrapped in convertible notes, preferred dividends, and liquidity traps. No dividends, no claim on Bitcoin, no direct exposure. What a setup. He's created the perfect vehicle for himself. Look, maybe Saylor's not panicking right now. Maybe he is not even concerned. Maybe he's just playing 4D chess. He's got $21 billion in shelf offerings locked and loaded. That's dry powder. If he really wanted to, he could tap the market again, raise capital, and go on another buying spree. Maybe he's just waiting for the price to dip lower, letting the weekend sell so that he can scoop up even cheaper sats. Maybe he's sitting back while BlackRock and Fidelity carry the weight of the narrative. Let the ETFs do all the work while he chills in the shadows. That's one way to see it, but here's the flip side. The balance sheet is a ticking time bomb. He's already leveraged to the hilt. The core software business is basically dead, and the whole funding model of equity sales, debt raises, dilution only works when Bitcoin is in the green. You can see what's going on in the markets. The new tariffs are spooking the market. Trump's latest announcements slam Bitcoin back to 80, or actually below $80,000, and risk assets across the board are wobbling. Saylor's not dumb. He might be trying to figure out if this is just a passing storm or the start of a full-blown macro meltdown. But here's the part that really gets me. Saylor literally said, the fact that you can buy Bitcoin for $80,000 right now is a joke. A joke? Then where are those buy orders that you're so famous for? Put your money where your mouth is, man. If it's such a steal, why isn't he backing up the truck? Maybe the real joke is that he can't buy anymore. Let's talk about what that means, not just for Saylor, but for the entire Bitcoin market. You think a crypto Twitter meltdown during a 5% dip is bad? Imagine the headlines here saying Michael Saylor dumps Bitcoin. It would trigger an absolute cascade. And guess what? Wall Street noticed. BlackRock's IBIT, Fidelity's ETF, Franklin Templeton, they aren't just products, they're replacements. Saylor's not the face of institutional Bitcoin anymore. He's been replaced. The era of wild-eyed Bitcoin evangelists is fading because, as always, the suits have officially arrived. Congratulations. So here's the question. Has Saylor already won? Is he the mad genius who front ran the world, stacked 500,000 Bitcoin and rode off into Bitcoin history? Or is he the gambler who pushed too hard, overplayed his hand, and now he cannot roll the dice without crashing the table? I'm sure time will answer that question for us. But for now, thanks for watching, and like and subscribe if you do want to see what we are buying and when we are selling. We've actually been buying something lately. Check out learningcrypto.com. Talk to you guys soon.